Hello and welcome to CMC Markets on Tuesday the 26th of January and the weekly market update. And this week I'm going to be concentrating, I think, largely on the risk-on, risk-off trade, RORO as I like to call it. We've seen a significant correlation between equity markets and oil prices, and I'm going to look at that correlation. I'm going to look at the key support levels on not only the German DAX but the S&P 500, and I'm also going to be looking at a proxy for the oil trade, and that is Canada yen, because I think there's potential that we could have seen a potential reversal in the Canadian dollar, particularly against the yen, but also I think against the US dollar as well. And that sort of brings me neatly into the Wednesday FOMC meeting, where Colin Szynski and myself will be holding a webinar at 3 p.m, which is free for you to sign up for, and there'll be a link on this video for you to navigate to so that you can sign up for that webinar. I'm going to make a start with the S&P 500 as we head into month end. We're still, I think, significantly above a key support level, and that's borne out by this chart that I'm about to put up in front of you right now. Now this chart here is a weekly chart, and I've drawn a support line through the lows in through pretty much most of 2014. Currently comes in just above the 1800 level, also comes in above the 200-week moving average, and it's also significantly important that we're above the trend line support from the March 2009 lows. So the broader uptrend that we've been in for the last 6 to 7 years still remains intact. We're still above some key support levels, and until such times as those support levels break, then the likelihood is we're probably going to continue to trend off that support level. If we break the support level, then we could well navigate lower. Moving on to the German DAX, and it's a similar sort of story again. We're looking at a long-term chart, and again I've identified a number of key support levels, notwithstanding the 200-week moving average. That for me is the key support level, along with the 9,300 area, which we bounced off earlier this month. So again, the oscillator, as in the S&P on the earlier chart, is looking a little bit oversold. That's not to say that it can't drift a little bit lower, but certainly on the basis of those two charts and the fact that we're seeing an awful lot of volatility in and around $30 a barrel in the oil price, maybe there is some evidence of an intermediate bottom starting to come in oil prices. To get a view on oil prices, sometimes it's a good idea to look at the commodity currencies, and in particular the Canadian dollar and the Norwegian krone, which can act as proxy currencies for crude oil. And I think it was rather notable last week that we saw some significant reversal patterns in the Canadian dollar. Now, the reason I've looked at the Canadian dollar against the Japanese yen is essentially because Canada's a net export country and Japan is a net import country. So in that context, sometimes looking at charts like a cross like Canada yen can be instructive in terms of the overall turnaround in sentiment on a particular currency pair. So let's start by looking at the daily chart, and in particular at a candle last week, which I've identified as a hammer. Now, this hammer chart does appear to suggest that we could well have a base in place, but we still need confirmation of that. So what I've done with this Canadian dollar chart, this Canadian dollar Japanese yen chart, is I've moved it forward to a weekly chart. Now, the weekly chart, we've posted a bullish engulfing week. Now, historically, these sorts of candles tend to act as a positive arbiter of a rebound. They still need to be confirmed, and what we don't want to see is a move back below the lows that we saw last week, but the oscillator is starting to look as if it's about to turn higher, and that could well suggest not only a significant rebound in the Canadian dollar, and that's significant in the context of its performance against the US dollar with the FOMC tomorrow, and a dovish FOMC could have the side effect of pushing the Canadian dollar higher, but also in the context of a significant rebound in the oil price. So that's it for this week. I'll expand upon a number of those themes at the webinar tomorrow at 3 p.m. Wednesday, prior to the FOMC meeting. Until then, or next week, this is Michael Hewson talking to you from CMC Markets.